Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The market's playbook is finally here. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk side. Options and plays in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk side. Options and plays in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, step by step they break it down. No confusion, no spinning around. With every trade they set the tone, making big calls on their trading throne. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Good morning, everyone. Welcome to the opening playbook for Thursday, October 9th. Looks like everybody is in good spirits this morning. Appreciate that. I want to draw your attention to a few things that are down below the presentation area, and depending upon what device you're on, it might be below the chat as well. We have a couple of new links that are down there. This Sunday, 2 days or 3 days from now, rather, Jeffrey Turnmeyer, one of our traders in our company here, is going to be launching a brand new automated alerts program at 1 p.m. Eastern time. And the sign up for that is down below in the first announcement. And then in the announcement that's normally down there with the helpful links for New Money Crew, we have two new links that we kind of premiered a little bit on the Monday or Tuesday night, rather, trivia that we did. And I wanted to add them to the helpful links here as well. So the New Money Crew Telegram channel is a brand new program that we started completely free. It is going to follow Stephen Ground, one of our editors here at Prosperity Pub and New Money Crew. He is a fairly new trader himself. He's been writing for quite some time, but he just recently started trading, and he's going to be talking about his journey as a new trader and kind of the trials and tribulations of that. And if you want to follow along with that, he'll also be giving out trade alerts, or not trade alerts, but trade recommendations. I want to say on a weekly basis that are coming from the crew here at New Money Crew. So there'll be fully approved trade recs that he's given out, but also an opportunity to just kind of follow along with a new trader and kind of sharing the experience of that, especially for those of you who are new, that might be helpful. And then also the second one there is the live trading events Telegram channel. We have a Telegram channel that will send you a message every morning showing you all the free programs that we have planned for the day, and then send you kind of a starting soon message in that Telegram channel for each of those programs as they come up to give you the link to join them. So if you'd like to know about more of our programs that are completely free and offer, different content but similar in overall nature to what we do in opening and closing playbook, where it's just we try and give you valuable content to help you along your way. It's by a number of different traders in our network, do different shows all day long. So that live trading events Telegram channel is also free to sign up for. So those are new links that are down in the announcements for you right now. Good morning, Graham.
Hey, how's it going?
I'm good. How are you?
Doing awesome this morning.
Good. Glad to hear it.
I've disappeared.
Sorry, I removed you.
There we go.
I removed you instead of my screen share.
Oh, it's all good. I think we're gonna get Alex on this morning. Let me see if
I don't know if he was coming on this morning. I think he's coming on this afternoon.
Okay.
Yeah, I think he's coming on this afternoon.
All right. Well, no worries. I have something prepared for us today. I just didn't know if I needed to get him on here because he's got some pretty cool trades going. Let me know in the chat. I'm gonna open up my chat here. Has anyone been following along with Alex in his Telegram channel? It's free.
Yeah.
You don't have to pay for anything. He's been doing these alerts from a scanner that he's using, an option scanner. I've been shocked by it because he's hitting 15%, 30%, 40%, sometimes over 100%. And he'll do 15 minutes, an hour, 2 hours, sometimes overnight, but very, very fast.
Yeah.
And he's crushing it. So
yeah, it's been great. Entry alerts, exit alerts, all for free. You know what? Let me post a link for that. Let me post a link for that too. I should have that in our links down below.
Cool.
Where is it? Here we go. Alex's Telegram channel. I'll put it in the chat first, and then I'll add it down below. That's Alex. I just put in the chat. Alex reads free Telegram, and I'll add it downstairs. I almost said for some reason. I don't know why.
Alrighty. Now that we have this rolling, let me go ahead and I had to restart my Thinkorswim. It was really lagging this morning for some reason. But it seems to be working good now. Anyone having issues on Thinkorswim this morning? Well, let me know in the chat. Either way, today we're going to take a look at we do this once a quarter, this training. Last quarter actually didn't end up too good on the trades that we did here. But typically speaking, at the beginning of each quarter, there's a lot of money rotation that goes on between 401ks, pensions, big funds, even just rebalancing of the indexes. And we try and piggyback off of that for some big results here and try to put together a basket of trades that we can take and hopefully, ideally, get a net win. Kind of like what I've been doing with that monthly portfolio that I've told you about, where you put together a basket. That one's 5 stocks. You expect 2, maybe 3 to lose, but the way you're structuring the options, those 2 to 3 that win end up paying for the whole thing and making it well worth your time. So that's kind of what we're going to look at today with the turn of the month trades. Now, before we get in, I do want to highlight that we've officially closed we haven't closed it yet. You can close it if you want. It expires. Does it expire tomorrow? CLSK, no, expires next week. We officially have our first trade over 1,000% here in the opening playbook. So I'm pretty.
Wow, that is awesome.
I don't think we've had one before. So that's there we go. We got one on the books. So we can say we've done it. We can still say it's pretty rare to see that, but hey, we will take it. Happy about that on CLSK for anyone who followed along with that. All right, so this is kind of the basis of what we're going to be talking about here today. every single month, there's a small rotation that goes on in the stock market. Here you can see the blue line shows the S&P 500% change only when owning at the start, middle of, or end of the quarter. So if you own the first month of the quarter, that's this one. If you own the second month of the quarter, so which case would be November, that's this one on average. You own the last month of the quarter, that's this one. So you can see start of the quarter is where almost all of the gains happen, which is crazy. This is all years. Look, since 1989. This is not just November or October, November, December. This is also January, February, March. It's also April, May, and June. It's also July, August, September, and it's obviously October, November, December. Hopefully that makes sense.
Yeah, the first month of each quarter, not the first month of the fourth quarter.
Exactly. So we're going to try to do that here because it's October. Now we're a couple days late to the party, but we're not, the party's not over yet. We know October is very bullish. We know we have some great opportunities right now, but it is interesting here to note. It's interesting here to note that the first month of the quarter is typically the earnings season. And it's an interesting note. We're not talking about specifically trying to trade earnings here, but it is interesting that most of the S&P growth happens during earnings season versus outside of earnings season is much, much more milder. Anyways, that's a side note for you guys. Now, if you don't have the $1 opening playbook VIP membership at the moment, you probably want to get that right now because I'm going to show you guys some scanners that work in Thinkorswim and StockFetcher that I built for you guys. Those are inside the members portal. So if you want those, you have to fork over the huge ask of $1 whole to get lifetime membership to the members.
I tried to push yesterday, folks, just so you know, I'm on your side. I tried to push for a 50% off on that today, but they wouldn't do it.
We can't do that, Dave. That is way too steep of a discount.
Yeah.
We got to keep this price high. We got to keep this price high here at $1.
Yeah.
All right. Click that link in the chat. Dave just posted it. That's where the scanners are going to be for today that we're going to cover. So if you want them, that's where we go. New month, new opportunities here. So every month there's a market pattern that's frequently called turn of the month investing. You can Google it, go take a look at it on the internet. It's a very, very popular investing term. Where essentially Wall Street is notorious. They're notoriously known for ditching losing positions and investing in new stocks. A lot of it can just be rebalancing as well. Also, there's new money that comes in from pension funds, 401ks, IRAs, mutual fund rebalancing, and more. And this is even more prevalent from quarter to quarter than it is just from month to month. So how can we piggyback on these new big investments from Wall Street for hopefully outsized gains each month? Well, as always, I start with my usual market analysis, right? The stuff we cover on Tuesdays. Here we know Q4, very, very bullish. Seasonally, very, very bullish in the presidential cycle. Here's kind of a little warning here that maybe we would see a cool off, right? We had the CPC pop below 0.75, which is just a little heads up that, hey, we might be taking a breather here for a second. But overall, we're feeling good about this market. We're going to say it's going to keep chugging higher and higher in trend. We might get a quick breather, but if you remember that chart I've shown you, we haven't seen a greater than 3% drawdown in the S&P since this April low. So every time we get a little dip, it's bought right up. Little dip, bought right up, little dip, bought right up, little dip, bought right up. And so if we get a little dip here, we expect it to be bought right up again. In fact, I've got some cool data that showed that the first 6% drawdown doesn't happen until almost a full year from a 20% drop. So we might go a full year. We might go till next March or April before seeing a 6% plus pullback, just historically speaking. All right, so we'll buy all dips here. Watch out for a quick breather. Either way, we're going to look for a monthly opportunity here. So I'm going to check out the sectors too, like I always do seasonally. We know tech is our favorite sector right now. Seasonally, Staples is strong, but it's not our favorite sector. You'll see here it's at the very bottom of our strength list, not doing so hot. Financials are good and healthcare are good in October, but every single sector in October is positive. Every single sector is bullish. So we've got a lot of sectors that we really like right now. We added in healthcare. We had a lot of folks helping out with some awesome names in healthcare too. I like Novo. I like Lilly, but there's a lot of really good names right now in healthcare. I'm trying to remember the one I gave you guys Tuesday. I want to check it out and see how it's doing right now. Because I'm just honestly curious. Does anyone remember the healthcare? It was a Newton pick from Tuesday.
I can grab it. It's in the opening
Yeah,
playbook.
it's INCY. Let's see. It could be totally tanked. I have no clue. Oh, it is. It does look like it pulled back to the 50-day moving average. That could be a good buy in there for INCY. Anyways, point is we like healthcare now. So those are stocks that we want on these sort of stocks on our list. So for scanning for the new stocks, I typically scan on the 4th trading day of the month, which again, we're a little bit late. Let me count our days of the month here. 1, 2, 3, 4. So Monday would have been the 4th. So we're 3 days late here, but it'll still give us a good idea of which stocks money may be rotating into. We want to see increasing momentum, increasing price action, and also increasing volume. So 3 key metrics here that we want to look out for. Large cap stock. I have in here no earnings, but I actually don't mind holding through earnings on some of these picks. And I'm just going to flip back real fast. Why can I say that? Well, if you look here at the S&P 500, most of the gains actually come through earnings. I'm actually going to run some pretty cool reports here and try and get an idea of how much of the S&P 500 returns actually happen due to earnings. You guys have probably seen that chart of the S&P 500 overnight versus intraday. Well, should it shock you that every earnings report, whether morning or after market, after close, happens in the overnight period? Is that why we have that phenomenon? I don't know. It could be. So this month, I'm going to look to see the strong stocks, even if they're going through earnings as well. But we may just select the options a little bit differently there to help play that on our side. And I will make sure to try and note it for you guys. If you don't like earnings, if you don't want to hold through it for this month-long hold, I'll give you that little pointer there so you can just skip it. All right. 3 key metrics here we want to look at. Again, large cap stock. We want to see increasing average price over 3 days. That's typically the first 3 days of the month. Again, we're a little bit late right now, so we'll see what it's doing now. And we want to see increasing volume. So we want to see transactions going up. And at the same time, those transactions are pushing the stock higher. If we saw transactions going up and the price dropping, we would then know that's probably sellers flooding the market versus buyers. So we'll go ahead and jump on over to the scanner now. Again, I'm hopeful that you guys have the membership here. If not, that link is...
It's in the chat, and it's also down below in the announcements.
Okay, it's in the announcements here. Can we pin that? Oh, I can pin it. There we go. Can I pin it? Nope.
Yep, you just did. And then you took it off.
Oh, I clicked it twice. There we go. We pinned it here. Click that link. You're going to need it if you want these scanners. Hopefully the membership will go through pretty quick here, like where you can get your login. I'll post it here in the chat too, or try to, but the replay on this class and then all the scanners are already here in the members portal. So we're going to log in here to the opening playbook membership. We're going to scroll down here to trading codes and scanners. There's obviously multiple scanners in here. Let's go ahead and just click here, see all 5 items. I want you guys just to practice doing that, because as we add more, you're going to want to do that anyways, because here you'll only see the top 4 listed, which means some may be hiding. So we're going to click to see all 5 here. And what we're doing today is we're going to start by trading the bullish money flows the bullish money flows scanner. And it looks like I don't have the stock fetcher version in here, but we can get that added. All right, so I clicked that bullish money flows Thinkorswim scanner. Now I've already got it installed, but if you don't, you can just copy this link, go to Thinkorswim and paste that link in, and it will pull it up on your end. If you'd prefer to manually install the code, there's a link. If you click this one down here, manual installation, you can copy and paste this code. And then you can also tweak this code. For example, if you want to see stocks below 10, you can edit this. So this one right now only filters for stocks above $10. So maybe you don't want that. Maybe you can just move that to 0 if you want all stocks. All sorts of things you can do here in the code if you want to. Now, I've obviously already got it installed. So what I'm going to do here is I'm going to pull up the code and I'm going to see how it works actually on a day like today when it's not the 3rd day or 4th day of the month. We're technically 3 days behind. So money flows bullish here. Let me go ahead and make my screen a bit bigger for you guys. There we go. All right, we got a bunch on here. This is going to be awesome. A ton to thumb through. Again, this is a little bit behind, a little bit delayed, but we just want to see stocks that are gaining steam here at the beginning of the month. Netflix looks like a really, really good candidate for me. Not only has it been an amazing stock, but it has cooled off for a while. It's above the 50-day moving average, gaining steam. It does have earnings this month, though, but this may be one where we're okay holding through earnings. This one's in the communication services, XLC. You know that sector has been really good to us. It's relatively very strong for us. So I'm just going to go ahead into our opening playbook trade sheet. Another reason why you probably want to have the membership. Oh, wow. Dave, you made this way nicer to read. Look at this, guys. Look what Dave did last night. He sets the date here, and he has trades from the opening playbook and trades from the closing playbook. Look at this. Let's all give Dave a round of applause here in the chat.
A Google Doc table gets me applause. I like it.
That's amazing. All right. I'm just going to make a note here. Netflix is one that we definitely like right now. Again, if you want this sheet, oops, I just lost it. If you want this sheet here, you know where to go. It's $1. You get everything for $1. Pushing hard today. All right. So we know we like Netflix. This one popped up here now. STZ. This one is a staple stock. We know staples are seasonally strong. This one is not a great trend. However, we may be able to play the seasonality, and look at this flip on momentum down here. They already had earnings this month. We see the momentum flipping. The scanner is already going for average volume increasing and price increasing at the same time. So even though we don't love this look on STZ, it could be a good one for the month. It's not my favorite chart in the world, but let me just go ahead and write it down here. The reason I'm writing it down is sometimes these scanners, it'll update one piece of data and it'll jump off the scanner. So I just don't want to lose any of these that we like. All righty, let's keep going. Next up, FDS. This one just looks like a nosediver, probably news around the earnings event here. Won't be looking at that one. FE. So utility stock. What do we think of utilities right now? Does anyone know?
Utilities are good, huh?
Yep. Let me go back here. Utilities are it's one of the stronger sectors right now in the market. It's been fluctuating, and keep in mind here, this is a little bit skewed because Bitcoin, gold, and the small caps are technically not a sector. So it looks like XLU is low, but it's really the 1, 2, 3. It's our fourth strongest sector right now of 11 sectors, fourth best. So we do like XLU right now. FE looks really good. All of these stocks that I picked so far, minus STZ because they just had earnings, but the Netflix and FE both have earnings this month, which I don't want to end up with all stocks to have earnings. I don't mind having a few because we're going to structure the options in a fun way. But ideally not all. All right, FDS, PayPal. PayPal's in financials. We know we like financials. It's not the prettiest chart ever. It does have earnings this month. I'm probably going to pass on PayPal for now just because I want to see some of these other stocks here. I think because we are about to go into earnings seasons, I think every single one of these, for the most part, is going to have earnings. I'm trying to find some that don't. EVRG, this is a beautiful chart. Look at this. Price action increasing. And again, this scanner is looking at volume too. So we know volume averages are increasing. This could replace FE. It's both utilities we ideally don't want. If we're going to trade a basket of stocks, we don't want them all in the same sector. All right, let me just do this. I'm going to restart from the top because they keep jumping on me. AT&T is communications. We already had a communications stock here. So I'm going to keep going. Did we do PayPal already? NOC, earnings this month. Industrials. We love industrials right now. Man, but all of these, this will be a more fun ride. We'll have some more speculative plays here, I guess, with all of this earnings happening. Monster Beverages, this thing is just a beast. This stock, has anyone seen this stock before? I mean, look at this stock. Technically a staple, but it's, the energy drinks, Monster energy drinks. This stock is a monster. Let me see how. Look at this thing. It just has gone up and up. Don't we wish we could all go back to 2004 when this thing was trading for 18 cents? Anyways. Back to the topic here. Monster looking really good. Hey, this is a staple stock. We know staples aren't a strong sector right now, but we also know that seasonally, staples are the second best, right? Staples are the second best. Monsters is very strong right now. I like Monster beverages. I'm going to add it to our list here, and then we're going to pick a few to build our little basket here. Kroger's a staple as well. All righty. CME Financial, yeah. ATO Utility, that one looks good too.
Once Graham's done with the list, I'll drop the whole thing in here for you guys that are not keeping up.
AMD looks awesome, but we know that this is probably increasing volume, increasing price action off that news. Either way, I really like the stock. AEP is also utilities. All right, let me just write these down. ATO, AMD, AEP. Which one was my other utility stock? Was it? I'm going to make sure I just kind of categorize these. I'm going to cut STZ because we like Monster better as a staple. This one's industrial. Utilities. Here's our communications. AMD's our tech. Oops. Excuse me. We also have AEP in utilities. So we'll probably slim that down to one or two that we really like. And ATO was utilities as well. All right, let me just slim these down real quick. Let's find two that we really like between FE, EVRG, AEP, and ATO. Here's ATO right here. Earnings in November. I like this one a lot. Let's see what the options are looking like. They have monthly options, very low volume. We're probably not going to be able to trade this just because the volume is so low. So I'm going to say ATO. Oops. Just cut this out down here. It's an XLU stock, options volume too low. Just so we know for a note here. All right, let me look at FE. Options volume is fine, but it only has monthlies. Let's look at EVRG, very low. We're going to move EVRG down here as well. We're just doing this in real time right now, how I would do this selection here. And trying to keep under our normal hour allotted slot here. AEP has good volume monthly. So both these are monthlies, which is going to put us in a bit of a pickle here as far as those. These other ones should all have weeklies. Let me confirm on Monster. Monster only has monthlies. Good volume, though. All right, what was our other sectors that we needed to get into? We have technology. We don't have discretionary. It wasn't my favorite. We have communications, utilities, industrials. Did we skip a financials?
We didn't do financials, yeah.
We had a couple pop up on the scanner, so let me go back here and see what we can find here. What was this one? It's probably not financials, but I doubt it's going to have good options. Yeah, just look at the options volume here. No good here on GL. So GL is a good one. I'll just add it to our list, but I'm going to write the same note for you guys. So if you want to buy stock, be my guest. If you want to go on a limb and try and buy options, you can be my guest too. But it's just very low volume, not enough volume for me to post here in the opening playbook. Another good one, low volume. Healthcare. That one actually looks really good. CNC. Why do you guys have any idea why I might like this on top of it popping up on our scanner? Anyone? I know we have a little delay here.
Yeah.
So CNC, something happened here for CNC. It's a healthcare stock. We know healthcare is sneaking up right now. It's not the strongest sector, but it is climbing the ladder. And we had a big gap here. And just the other day, it went in to fill that gap. So I'm gonna add that one to the list. CME could be a financials one that we trade. Let me go ahead and add CNC, XLV. Oh, AV. See, like this is what I'm saying, that sometimes because the data updates in real time, like AVGO is now on the list, which was probably better than AMD right now. Again, we are a few days out, but I'm gonna replace that one there. And then CME. Let me look at CME. It's just not that incredibly strong. And then if you look at the beginning of the month, also not strong here. All right. So here's our list of tickers that we like right now. This gives us a basket of 6 stocks. Let me look at FE and AEP, see if we dump one. We honestly could just go XLU. Both look almost identical. I would go with AEP over FE, but again, just look at XLU. If you want to just play it safe, just buy some XLU. Let me see what the options look like here. Kind of pricey. All right. We're going to go with AEP, but they only have monthlies. We might just dump these two, honestly, just because I don't love that we're holding monthly on these. So we're not going to have an XLU trade, but we're going to build a basket here of 5 stocks between those 5. So we'll start here with Netflix. Again, some of these will be holding through earnings. So I will do my best to be transparent. Like Netflix is going to hold through earnings. Whether that's good or bad or not, we don't know. Look at this. Netflix likes to beat earnings, though. 1, 2, 3. 3 of the last 4, they outperformed on earnings. So we'll see if that happens again. What I'm going to do here, though, is I'm going to look at the market maker move as well and make sure we're within the market maker move. We don't want to be way outside of it because that would be a highly improbable trade to make. So let me go ahead and pull this sheet over here so I can type and talk at the same time. So first trade of our basket, we're going to October 31st. Netflix. I'm going to buy 31 October. I'm just trying to time it up with the month here. This gives us 2 weeks. Give or take 3 weeks, actually. Yeah, 3 weeks. We're going to play outside of the range here. So we could wrap it. You could definitely wrap it. But ideally, if it does well through earnings, it's either going to do good or bad through earnings. And it's either going to move up or down. So ideally, it would be on the right side of that. And so we can go for a little bit more bang for the buck here, depending. And also, this is hard to see when my text is so big. All right, well, the options prices are a little janky right now. Let me see.
Look, it's either good for you or good for the audience, and which one do you care about?
Just me. Just myself. All right. Well, we may just go out to the monthlies, just depending on what the fills are like, because that is not a good price on versus this is a much better price on Netflix. Let's go ahead and roll it out to the monthly. So these will be a little bit longer hold time. But hey, when it comes to trading this way, and I can show you the data, I do not mind holding longer. It's just like sometimes we get a little impatient and say, I don't want to hold this thing forever. 6 weeks, whatever this is, may feel like forever, but it's not. So let me go ahead and look here in the options, see what we can do to go out to November, which means we may bring in some of our utility stocks again. All right, market maker moves is 134 points to the upside here, which should put you about 1350. We don't want to go all the way out there. Again, I apologize, but this is really hard for me to see with how big it is. Cause
well, you can shrink it down and do what you got to do and then type it out.
One here.
You know?
Yeah, let's take a look here. All right, so this puts that 100 or 1350. I don't want to be that far out, but we'll go under it and let's see what this looks like. 167. This is going to be very speculative if we did that, but look at this. 1300. So it's out of the money, but it's basically just saying, hey, I think we'll just go higher from here on Netflix. The payouts is really nice. Let me give you the exact number. It's a 200% payout almost. If we are right here again, my thinking here when I do these portfolios is I don't care to win all of them. Obviously, winning all of them would be awesome, but I'm going to try to structure it in a way where I only have to win 2 of the 5 to make money, which may sound crazy. That's a 40% win rate. If I have a 40% win rate on these trades, I make money. That's kind of what I'm shooting for here. Now, ideally, I have 3 of the 5 win. Then I make really good money. I'll walk you through the numbers here in a second. But Netflix, we're going to play it right inside that market maker range. It's about half the market maker range. We're going to buy the 12.95 call, and then we're going to sell, and this is the 21st of November, sell the 1300 call. So this puts us right within that range. It's at a net debit of 170. And again, Netflix doesn't even have to go that crazy. It does need to do well, right? We need it to work here. But if I'm right, it will pay almost 200%. Filled right away at 170. You might be able to go a little bit cheaper. So that's the first trade here in this portfolio. And I'm going to, some people were, I've seen people ask before or comment that you should be winning like 70, 80% of the time. Let me just show you this. I'm just going to type it up real quick. So this is what I'm going for here. All right. Do you guys see my screen here?
Yep.
So because that one is going to pay, if we're right, about 200%, we're going to take 5 trades here. If 2 win, 3 lose, that's a 40% win rate. However, 200%, 200%, minus 100, minus 100, minus 100, our net P&L is 100%. So if I put a, let's just say I put 500 into each. Our net P&L here, let me just copy this over, is going to be $500. Even winning 40% of the time. And that, if you put 500 each, that's 2,500 invested. So that puts you at a 20% monthly return. It's pretty outstanding. If you are really good and you win 3 of the 5, you're at like an 80% monthly return. So that is the thinking here for anyone curious or questioning why I may have said I only care to win 2 of these 5. This is exactly why. If this doesn't make sense, let me know in the chat. Say this does not make sense.
Well, if you think about it, you're winning 2, and you're in the bare bones version of it. You're winning 2, you're losing 3. So to break even, your 2 would have to make 150%, right?
Exactly right.
1.5 times 2 is 3. So to break even on the 3 losses, your 2 would have to be at 150%. On that, so anything over 150% potential gain on each one means you're coming out ahead if you only win 2.
Yep, that's exactly right. So that's the thinking behind these trades here. Sam says my overnight recommendation was badly. I didn't make an overnight recommendation. That I'm aware of.
If you're talking about overnight options, and I don't know off the top of my head where that landed. Look, the way these programs work, Sam, is that we have an overall profitable strategy. It doesn't mean every trade's profitable. It means that we have a certain number of winners that win a certain percentage. We have a certain number of losers that lose a certain percentage. And when you add it all up, we have a profitable history of coming out ahead. We obviously can't promise any given trade is going to win. That's not the way this works. So if you stick around, you'll learn the strategy, you'll learn the psychology of it, and you'll learn that which programs win more but win a little, win more often but win a little less each time, which strategies win much bigger wins, which win much bigger wins but less often time. it's all about being net profitable in the end of a series of trades, not necessarily every trade always being a winner. That's not really possible.
Yep. Next up, we have NOC. Now, you'll notice the volume here is a little bit lighter. If you guys have come to the classes in the past, you may say, or if you haven't come to class in the past, you might say, well, we should not be trading this. But if you have come to class in the past, you should know that we always use a limit order. So we always set the price we are willing to pay. So I'm okay trading these, right? I'm okay trading these as long as I'm not, if you go market and you end up overpaying, then that's bad. But we're going to use a limit here to set the price we want. So Northrop Grumman has earnings coming up as well over this next month, but it looks really good. It's definitely an earnings mover. You can see that here. It does have a market maker. Expected move of about $52. You can see that right here, $52 by November 21st. So again, I would like to slide under that. That puts it at 690, give or take. I would like to slide under that. The problem is I'm getting a hard read on the options here with the volume so low. So again, I'm going to set the price I want to pay, but I really don't want to pay more than about $1.70 on a $5 width spread like we just did there with Netflix. And I'm getting a tough read right now on these because of the wide bid ask. With that said, I know that this one, if this would fill here, yeah, that one can fill at 155. This one's within our market maker move. It's going to pay over 200% if we're right, and I know it will fill. So I will give you guys this one right now. But just know, ideally, if you can slide it down a bit and still get under 170, that would be the better way to play it. Either way, I got to get my I'm falling behind on my pace here today. So let me go ahead and get this trade out to you guys. This is within market maker range. It does have earnings. This one is an earnings moving stock. Very typical. But we're going to go for it. We're going to go for that 200%, actually slightly over 200% payout here. Yes, we did just hit on 60-minute. I was
just going to say, by the way, your 60-minute closed in like under 40 minutes.
There you go. So it's a 40-minute income trade today.
It's 40-minute income instead of 60-minute income now.
Yeah. All right. So if we go back to that sheet there, so let's look at this. I did the first one. We got filled at $1.70, right? So it's in 194. The second one I got filled at 155. That's not false. There we go. 228. So these are our two trades we have on the board right now. And then we'll talk through exactly how we're going for this net P&L. This is just a sum, but we probably should actually just do average, would be more true to what the true return is. So even if we won those first two and lost the next three I'm going to give you, you're still making 23% on the month, which I think is pretty incredible for a passive trading strategy. All right, next up here on the list, we have MNST Monster Beverage. This thing's all hyped up on Mountain Dew. Just kidding. It's all hyped up on Monster energy drinks. And we're going to see if it can keep on running this month as it hit our scanner. It's in a beautiful, beautiful trend. Staples are seasonally strong. This one does have earnings within the range again. Again, that's going to be very typical. We saw that chart of how stocks within earnings seasons typically do really well. All right, market maker move here is $6. I put that at $74 from here. We may have a tricky time in the options, but we're going to take a look to see if we can get that around 200% payout. So this is 150% here. If you go more aggressive, it's over 200%. Let me see what happens if I widen this up. 160. All right, this is what we're going to do here. And this one may finish within the range, so we'll just have to keep an eye on it when late November rolls around. Holler at me. But this will give us a chance to hit a win even if we don't get above that 75 strike. Even if the stock only moves a couple bucks here, this one should do well. So 21 of November, I'm looking at the 70 call to buy. I'm going to sell the 75 call. Right now it's at 168. Of course, guys, remember, use a limit order. Go as low as possible. Hey, maybe start at 165. See if it fills. Oh, filled at 165. So it showed me 168. I punched in 165. It filled right away. So with these spreads here, with these monthly expirations, play with it. Be patient. We're not racing here. Even if you don't get filled today, a lot of times you can come back tomorrow and get filled. All right, this is a little bit longer play, about 6 weeks out here. So I got filled at 165. I'll post this one in the chat too. My point is, use a limit order. Be smart, be patient.
I have a question for you.
Hit me with it.
So somebody's asking, if they don't have the funds to do all of these, is it smart to do just one? Is a win risk reward ratio on a given trade okay to take the one trade, or does it only make sense as a portfolio?
In my opinion, it makes the most sense as a portfolio. If you just take one, it's going to be a kind of a coin flip if that's going to be the one that works out or not. You're going to just have a very volatile growth curve, which could be good. Maybe you get lucky and hit 3 of the months in a row, and that means you're averaging like 200% a month instead of 20%. But it's designed to work more as a portfolio where we expect a couple to lose, a couple to win, and we're net positive at the end of the day. You can always buy the shares too. If you don't want to risk it on options, buy the underlying shares. It's going to be a lot less volatile. You might only get 2-3% if you're good, but that's kind of what comes with shares versus the options. More volatile with the options. When you lose on shares, you're losing a couple percent. When you lose on options, you're losing 100%. So there's a big difference there. Versus obviously when you win, you're winning 2% versus 200%. Well, let's keep flying through here. AVGO, we love technology right now. We love chip stocks. AVGO, it was AMD or AVGO. Obviously, both are amazing stocks right now. AVGO does not have earnings over the next month, whereas AMD does. This one made its jump. It pulled back, and it knows that it can go back to these all-time highs. I believe that AVGO, Broadcom, will be back at 376 here very soon before we even know it, before we can even pay attention. All right, so hopefully that works out with us with this month, with this picks here. So our market maker moves about $50. That puts us close to around 390, 395. So we'd like to slide in under that and see what we can get paid to do. Oh, man, these are expensive. Holy moly. Oh, they're $10. Oh, okay. They're $10 width. I was in the $5 width mindset there. Woo. All right. Back down to earth here. This is a really good trade then, actually. These are really, really cheap. 380. I don't want to be above all-time highs per se. I want to be within market maker move, and I want to be within all-time highs as well, personally. So let's look at this. 345. 345 divided by... Oh, I'm doing it backwards. So it's 189% payout. Might be able to adjust it and see if you can get in a little bit cheaper. I'll just let that one sit at 340. If not, I'll go 345. But this is within market maker move by about 20 points. And it's also within the all-time high of 380. It should look really good. However, this one is a little bit more expensive than the other two. It's $10 width strike, so that would be the main reason why it's more expensive. But even relatively speaking, it's a little bit pricier on the debits. All right, there we go. AVGO. I'm just going to go ahead and see if I can get filled here at 345 where it was. I'm actually shocked. This one's the most liquid one we've traded yet, and it hasn't filled right away. But I'll let it sit here. Again, don't feel like you have to rush into these. Oh, filled right away at 345. All right. I'm going to show you the odds here. So this one is right under 200%. Remember, we said we ideally want to be about that 200% mark because we want to win 2 of these trades and then net out a positive. Even so, as long as we're above 150%, we should be in the clear. So we need all of that. We absolutely need all of these above 150% on the ROI potential. But I really like to go for about 200% when it's within market maker move. All right, trade number 5 here. We are doing CNC, which is a healthcare stock. It was looking nice, and it was gap filling too. Let me just cancel this other buy. All right. So we like this one a lot. This does have earnings. Let's go ahead and take a look at the market maker move. Healthcare is also seasonally hot over the next few months as well. So that's just a good note. All right, this is a cheaper stock, so we're going to have to play with these option strikes, especially considering these are 250 strikes, which is nuts on a stock that's this cheap. It's a $6 move, so I put you at $44. So we'd love to slide in under that. Let's see what these are playing at. 80 cents is perfect for me. That's a 100 or 212% payout here. So these options are absolutely perfect within market maker move. Let's see where it's at on the gap fill too. 42 strike. I mean, look, this thing barely has to move. This has to go right about there. You see my crosshairs. It doesn't even have to go for the full gap fill. If you want to be real aggressive, maybe go buy some January options going for that gap fill. But here we go. It's trading at a 78 cents debit on CNC. Again, 21 November expiration. We're going to buy the 40 strike call and sell the 42.5 strike call on CNC. I'm going to get 2 of these because it's going to even out that portfolio a little bit more. However, the real thing you would like to do is put the same risk in each one or as close to as possible. Problem is, not everyone wants to take a massive position per se. Filled right away at 80 cents. So net debit. So let me edit this. Here we go.
There's a question about. Oh, sorry, go ahead.
Oh, I was going to say the thing is, if you want to match them up perfectly, finding that lowest common denominator, you can end up with a pretty large stake of options here. So
yeah,
ideally, what you would have here is you'd have 2 Netflixes, 2 NOCs, 2 MNSTs, 1 AVGO, and 4 CNCs. That would get you pretty close to about $300 to $400 in each. That would be the closest way to try and average out that bottom line portfolio. So let me just post these all together. And again, I'm not going to tell you how many to buy, but if you want the lowest common denominator, roughly speaking, it would be 2 Netflix, 2 NOC, 2 MNST, 1 AVGO, and 4 CNC. So I've posted it there in the chat. That would get you roughly about $300, $400 in each. So it should have that smooth curve we're looking for here. In CNC, let me update that to 80 cents. There we go. All right, let me fill this out, and then let's go ahead and see if we have any questions here. All right, so here's our portfolio. Ideally, we want to win 2 of these. So all of them are right within that 200 point. Actually, let's average it. Averaging 204. We are like almost perfect on this portfolio. Doesn't get much better. And we only have to win 2 of the 5 here. So 40% win rate. Who here thinks you can get a 40% win rate? Hopefully we can. If you get that 40% win rate, you're making about 20% on the portfolio over the month, which I know 20% on options may sound relatively light, but this is more of a portfolio trade. So where you're trying to work it in the background, let it turn higher. If you can get 20% a month on options that working in the background, I mean, you're a genius. You've been killing it. I've been doing it on my, actually remind me tomorrow, everyone. I've been doing it on my just monthly momentum picks. I'm averaging 12% a month on the options. So, hopefully we do a little bit better here. Now, keep in mind, there's going to be some months, guys. There's going to be some months where all 5 win. There's also going to be some months where all 5 lose. So we're looking for that overall trajectory here. Not, we don't need to see 20% exactly every single month. We just want to average that over the course of a year. Hopefully that makes some sense there.
All right. If I can address a couple of the questions that have been flying by. So for one, there's a record of these in the chat, which might scroll by a little bit as we keep talking, but there's also a record of all of them inside the announcements down below. Actually, let me just add your last comment about the ratios, and then it'll be complete. And then it's also what you're seeing on Graham's screen right now. That is essentially a trade tracker. It's sorry. What you're seeing on the screen is just math. What he had on the screen a minute ago was the trade doc, and that is in the members area. Yeah, that is in the members area of the opening playbook on one-click trading. So in one-click trading, it just says trade entries, and you can go in there. It's not exactly a trade tracker like we have for everything for the premium programs, because in those we track the exits and the profit and loss and all of that. This is just a record of the trades we took. The exits are on you to keep track of. So you can always find them there. If you don't have access to the $1 playbook area, it is pinned to the top of the chat. It's literally $1. It never expires. You can always do that. Now, yes, you can trade these in a Robinhood account. You can trade these trades in any major broker that'll let you do option spreads, for which you do need permissions beyond the basic options permissions. If you're unfamiliar with getting different levels of options permissions, there's a guide in the announcements down at the bottom under helpful links. It says guide to level 2 options, but it's really all the different levels of options, and that'll help you get permissions in your account to take option spreads. All right, what else we got here, Randy? So the 60-minute trade that only took 40 minutes this morning, it's going to be in the trade tracker in the 60-minute members area. So it's for members only, and it's going to be in there.
Correct.
As far as exits on these trades that we just posted, Graham, I know you said one of them looked like it might wind up between the strikes, but basically they don't need to worry about it right now.
Yeah, we will talk about it here when we get closer to that November 21st day. So closer to Thanksgiving. Actually, anyone curious? I saw some people ask about 60-minute trade tracker. We actually added a second tab to the trade tracker just to show you what it looks like with the runners. So leaving no target. So if you're a 60-minute income member, just a little fun.
Oh, nice.
The second tab.
Nice. I hadn't seen that. So one's with setting targets and one's with letting it run to expiration as a swing trade.
Exactly right.
Awesome. Yeah. So for those of you who don't have day trade permissions and are wary of trying to set targets and hitting your limits and all of that kind of stuff with day trading, that'll help you kind of understand what you should be getting out of the program if you're letting them run to the end of the day.
Yeah,
which you can do. And then
I should make another tab. Ever since we've done the low VIX thing, the profits up 2.5x. So
yeah, that's awesome.
Really excited about that. Now I know some people have been asking about what do we do in the low VIX. I'll just tell you guys right now. Actually, who all here is a 60-minute income member? Give me a yes in the chat, just so I make sure I'm not talking to nobody.
I know you're not talking to nobody. A bunch of people already said this morning it hit already.
I'll just show it to you. Actually, I have a strategy for low VIX. I have a strategy for low VIX. Here it is. It's a butterfly. Actually, no, this one's not a butterfly. This one is we're iron condor. We're trapping it here.
Sam, yes, it's too late to put in the trade for 60-minute.
So if you look here, guys, the rule here is VIX, you only trade it when it's under 16. It's 80% win rate. Excellent stats. I mean, this goes all the way back to 2022 when daily options were listed. Positive returns in all 3 of the last years. Obviously, 2022, I don't know why. Oh, VIX was always above 16 that whole year. So it was all just a normal base trade then. Here's a trade. I should have a class for you guys just to walk you through it. My issue right now is, one, it is an iron condor, so it's a little bit more complex. I don't want to scare members, but also a lot of these. So the way it works is if the VIX is below 16, right, you're just entering a trade at 9:45. So if at 9:45 VIX is below 16, you enter an iron condor, just trapping the price of the stock. And then you're setting a target for 10% of the credit you get. So you enter for 370, credit for 330. Let me just actually see if I can update the dates here to whatever the most recent thing it'll let me do is.
So if it's a 10% credit, that means you're probably getting like a 15% ROI.
Exactly right. Yeah, I'll show you. Actually, it's, here we go. See what it's looking like now. Sorry. My point here is that I was worried because it's an iron condor. I was worried if we would have issues with getting all the members filled versus kind of moving that price and getting kind of skewed results. So, anyways, here we go. So you basically, if you're curious, you just do an iron condor, 5 strikes on each side of the SPX at 9:45, and then you get around $3 to $4 in credit on that. and then you're going to set your target at 10% of that credit. So if 370 is your credit, you're going to subtract 37 cents from this, and that's what your target's going to be. So on a actual risk to reward basis, on this one, you're risking $1.30. I won't walk you through all the math, and you're making what is that, 45 cents?
Yeah, 45 cents. That's why I figured it's about
45 over $1.30. That's actually a 36% return on risk, or 34.6% return on your actual risk.
No.
So it can be really juicy. Again, my fear, why I haven't been sending it out to members yet, is I'm fearful that if I send it out to 800 people at once, the fills are going to be a little bit all different because there's so many options strung together.
You did 55 divided by 370?
What's that?
Your math was 55 divided by 370?
No, it should have been
Or
45
45 divided by 370, I mean?
divided by 1.3.
Oh, by the difference. Got it. Yeah.
Yeah, because these are $5 wide strikes. You can't
yeah.
finish in both areas. So the worst you could do is be above it or below it.
Yep.
$5 width minus the premium you got is $1.30. So that's the most you can lose here. So if you lose $1.30. If you win, you make 45 cents. So it's a 34% return on risk with a target. So look at these targets. Hit at 10:56, hit at 10:26, 10:54, 1 p.m., 11 o'clock. Obviously, when you lose, it expires at 4 p.m. You can see some losers here. So I will walk you guys through it in more detail if you want. I'll type up something for the members and post it in the portal. But again, I really want to make sure it's something that everyone can do at the same time.
You think on SPX you're going to have problems getting fills? Or being allowed?
I think because it's an iron condor.
Just because it's 4 legs?
4 legs altogether, and we have 800 members. Like when we have 2 legs, it's no problem on just our normal spread.
Yeah.
But with 4, it's just going to make it a little bit trickier because you're going to have someone take the other side of that.
Yeah.
So I have a couple other things I played with. One was a butterfly. That one was a whole other rabbit trail of pretty much of, I don't know if we can actually get filled on this across the whole membership.
Yeah.
But anyways, I'll just, you know what? Even if you're not a member, if you're smart enough, you can figure this out. Let me just do this. Did that post in the chat?
I'm still above trying to catch up. Let me see. What are you
rules for you smarty pants? There you go.
It did. There you go.
So the rule is if VIX is below 16, right at 9:45, you just set up an iron condor 5 wide on each side of the current price. So it's kind of like a wrap order, but it's a wrap condor, if you will. Profit target, 10% of the premium you got.
So CMC, if you're talking about the number of contracts for the trades we took this morning, then it's in the announcements down below, like the ratio to keep it even. You don't have to do that, but it'll balance out better for you if you have the funds. Pro 3, yeah, he's talking about 60-minute, but normally right now we skip 60-minute when the volatility is really low, and he's talking about a low volatility alternative trades within 60 minutes.
Yeah, so this would be like, the alternative. When VIX is low, what is there anything we can do to make a little extra money? Well, yeah, there is. It's pretty good.
Yeah.
But it is a little bit more complex. I really would like to make it easier and then easier for fills as well. Mark, the number of legs is not that important. It's still one trade, yes, but it is tougher to get filled. If you were to put 100 legs together, good luck getting filled.
Yeah.
Mitch, what about doing it as a straight butterfly debit spread? I have tried that. I've tested it. It looks like it's good, but the thing is the numbers get so wonky on the butterfly debit spreads. Just because of the price, I don't know if I assume when I run it through the back tester that's almost a glitch because it's like 100% win rate on the butterflies, but I don't think that's very legitimate because I've tried to do it myself and have not gotten the same fills that the back tester showed on that. So, all right, enough of this. All right, so I went down a major rabbit hole there. Again, like Dave said, if you have the opening playbook membership, come here to trade entries. He has beautified this sheet. I normally take pride in making things look good myself. Dave's done a much better job here. Look at this, guys. October 9th, that is today. Opening playbook on this side. You can see all the trades we talked about with the exact options. And look, you can even see the tickers we talked about that we didn't take trades on. Super cool. And then in the closing playbook, we'll post the shotgun trades as well. So thank you, Dave. That link is pinned at the top here. Now, before we jump off today, I do have one final announcement for you guys. if you have had a chance, or if you haven't had a chance to see the class I put together this week, well, I'm going to cover just a shortened version today, bits and pieces, because this is the last time we're going to do it. We're announcing the new dashboard. It's going to be next week. I have access to it right now. It looks really awesome, but I want to make sure it's running perfectly before handing it off to the members. But this is going to be the last time I'm going to talk about this for a while, because the price is going to double on this. I'm just going to say it right now. Price is going to double on this program tonight at midnight. So I know some people haven't seen it. So today I'm going to walk you through the data here. I'm going to give you 10 stocks that the data says should see the most success over the coming month. You'll get the tickers, entry dates, exit dates, and return expiration or expectations for each one of them. We're going to be talking about stocks that typically perform very, very well in October. If you can recognize the logo and kind of squint your eyes, you can see that one's Walmart. But I'm going to give you all of them here in just a moment. So make sure you take notes and feel free to screenshot the slides. Yes, I pulled this data together, but have the data for yourself, because these picks I'm sharing are from the exact same data pool that I've been using to hit trades like 130% here on Google in 17 days. These are we talk about passive trades. These are very passive. They pop up on our calendar. We know the data says they are very, very good to take. Plop down a trade, and we almost forget that they're even there. This one is enough to turn $1,000 into $2,000. LW, $2,000 into $5,034 in 12 days. H&R Block here, $2,500 and then $9,055. And the students who have been following along have done quite well. Tim L says, I appreciate the communication through multiple means, made $1,200 on the options. Jen here, loving the wrap orders, made $5,700 on WFC, $1,800 on Amazon, $1,250 on MLM. Robinson made $7,500 this week in vacation in PCB, Florida. Now, today we're going to look at a whole bunch of market data. I'm going to show you data that will identify patterns which have occurred 100% of the time in the past when they line up. Yes, we're going to talk about data so powerful that it's worked with a 100% accuracy over many, many years. But with that said, this does not guarantee that it will happen again in the future. We all, no one has a crystal ball here. We can't see the future. So always make sure that you risk your trades appropriate. You're sizing your trades appropriately. Don't risk too much. Don't go all in on any one pick. Now, my goal